Welcome, and thanks for joining me today on Mortgage Manager Playbook, a podcast for sales leaders who want to improve their team's sales performance and originate more loans. I'm Pat Sherlock, your host. Today, I want to talk about the topic that is really important, and I have a great guest to speak about this, but what do real estate agents really want from a loan officer? And my great friend, Deb Killian, who is owner of CLOES.Online training company, who has been in our business, Deb, I'm not going to say how long, but a long time.
A long
And
time.
she's done everything in our business. She originated almost $1 billion in loans. And then, of course, she's had a training company. And of course, she's been on all sides of our business. So I'm excited, Deb, to have you today.
Thank you very much, Pat. I appreciate it. I'm looking forward to it.
So let's talk about, I have to ask the age-old question. How did you get into the mortgage space? How did you join our world?
Oh boy. I was an accountant before I get into the mortgage business. And one of my clients owned a mortgage company, a small mortgage brokerage business, actually renting space in the same building where my accounting business was. And I'll make a long story short. We went out to lunch one day. I had 2 glasses of wine and she said, "Why don't you just be a loan originator and come work with us?" And I said, "Okay." That was
Well,
it.
well, that recruiting's still going on today. So
Yes.
no
Yes,
surprise.
it is.
And so you have seen everything, and certainly with all your years in our business, but what strategies that you think really the mortgage world should be focusing on and but really hasn't been?
I am still shocked, Pat, and as you probably are, that here we are in 2024 and that education and training is still lacking. That production is always the focus.
Sure.
That people say they train, but then they bring people on, they onboard them, they teach them how to pull credit, they teach them how to run DU, but they don't teach them the fundamentals about what they should be doing with not only the customers, but with their real estate agent partners.
Well, that's why I was excited to talk to you about, and I agree with you 100%. And I really think in all these years that you and I have been in the business, we're still back to this issue, an untrained workforce, which is really what we're talking about. But talk about, you've done a lot of work with the CE classes for real estate agents, and I know you just were recently out there talking to a group. And I want to talk about our main topic of what are they saying about the loan officer world. What do they really want? And then talk about this whole issue of where really it's an opportunity for the good loan officer to execute in a different way than the ones that aren't good. So talk about your CE classes that you just had with real estate agents.
Yeah, so I was in South Dakota and did a little 3-day road trip actually and taught in 3 cities in South Dakota, 6-hour courses to real estate agents. And one of the things that I hear consistently when I'm teaching real estate CE is they don't want to not know what's happening. They just can't stand the idea of things happening behind the scenes. They don't know what's happening, and loan originators not communicating with them. So I've actually talked to quite a few individual realtors one-on-one, and it's kind of interesting some of the things they say. For instance, when I ask, what is the first thing, what is the most important thing to you about your relationship with a loan originator? And what's the first word always is communication, communication, communication. So I delved into that a little bit and I said, well, tell me what that means. What kind of communication are you expecting? I don't care. She said, one agent said to me, I don't care how it's communicated. I just want to know that they're responding to me as soon as possible, like immediately. I said, let's talk about the word immediately. She said, within 5 minutes. I said, oh, okay, all right, I appreciate that. What if you and I are working together and I'm your originator and you trust me and 2 hours goes by and I didn't get back to you yet? Is it possible I'm sitting with a client or I'm in a class or doing something, She said, well, I guess within 24 hours would be okay, but really immediately. I said, okay. And what would be the second thing that's important? And this kind of caught me off guard. She said, personality. I want to know that the personality of the originator is going to mesh with the customer that I'm referring them to, that they can handle the customer in an appropriate way. And that caught me off guard because I was expecting her to say, rates or something else. She said, I also want to know that when I refer a customer to an originator, they contact that customer immediately. Even if they can't talk to them right now, even if it's a quick text to say, so-and-so referred me to you. I'm tied up this morning until noon, but I'd be happy to talk with you at 12 o'clock or whatever. So they want that immediate touch to the customer, even if it's not the initial conversation, just hey, I know you're out there waiting for me and I will get back to you. So I thought that was pretty reasonable.
So Deb, talk about with these realtors that you've talked to, and you've done more than South Dakota, all over the place.
Oh, yeah.
And oh yeah, so you've seen realtors every which way. They obviously are very focused on the word immediate. And so have they actually, in other words, ceased giving business to a loan officer because they weren't immediate? I mean, that's really what I'm curious about.
I think they're very hesitant when they're working with an originator that they don't know. So one of the things one of the agents said to me was when she gets a pre-approval or a pre-qual letter from some company that she's never heard of,
Mm-hmm.
her antenna goes up immediately
Mm-hmm.
and she gets nervous right from the start. There's like this insecurity about the whole transaction because she never heard of the company or she doesn't know the originator. When they're referring business to people they have relationships with, it's a whole different ballgame,
Mm-hmm.
right? So originators really need to be strengthening that relationship and stop going out there and saying, I got the best rates and service, and find out what does that agent want and what can the originator do to enhance their business, to provide better service. They have to be having those conversations. And I think the focus is on the wrong place sometimes with originators.
So when they talk about making the switch, and when do they, in other words, what is it that they look for when they haven't done business with one of with the originator? The originator goes to them, they're not happy with who they're dealing with. What are the kind of the signals that they're looking at?
Well, I mean, some of the things I hear are like, I want to know that my whoever the originator is offering options.
Mm,
Just because the customer applies for 20% down, 80% financing on a purchase doesn't mean that's the way that they should just, we're not order takers, so to speak, right? So
sure.
she said, this one woman, I want to know that you're presenting options. I want to know the originator can say, okay, well, let's look at 20% down. Let's look at 10% down. Let's look at 5% down. What does it mean in terms of payments? How does it help you get to the house you want? They want to know that the originator did a thorough disclosure, if you will, to the
Hmm.
customer about educating them about what is available to them, not just applying for a 30-year fixed 20% down and not having any other conversation because simply that's what the customer asked for.
So are they making this decision on the lender that the loan officer is at, or on the loan officer?
On the loan officer.
Right.
Very clear that it's almost like, and I'm going to caveat this, they don't really care about the company as much. If that loan officer knows what they're doing, if they're communicating, responsive, all of that, that's more important to them than anything. The
Mhm.
caveat is if they've had bad experiences, and I won't call anybody out, but let's just say some big national lender, right, who you see advertising or whatever, if they've had bad experiences or heard bad things from other agents, they don't really want to work with those type of lenders. So the reputation of the company is out there. If the reputation is out there, that's going to sway them with that originator. Barring that, the originator relationship is really what they're focused on.
And so, and I want you to talk, I know because you've done a lot of work in this area, but the loan officer, if they're trying to educate, and you've said before that the real estate agent doesn't really understand what's happening behind the scenes, I guess, if you will. And so, if you were suggesting to a loan officer how to, in other words, educate the realtor, what would you do?
So, okay, the easiest thing is to actually sit down with a real estate agent, which I know is not easy to get. Sometimes they don't want to sit down with you, but if you're developing relationships, is to sit down and not spill your guts and tell everybody how wonderful you are as an originator. Find out what their needs and wants, concerns, their worries. One woman said, I said, what is your biggest worry when it
Mhm.
comes to a mortgage? And they said that the mortgage will ever go through, even with people they trust. the worry, it's constantly on their minds. Is this loan going to close? Is the transaction really approved? Are there any outstanding conditions? They've got this, like, my impression is they've got this constant script running in their heads
Mhm.
that makes them feel insecure until they get that clear to close.
And so what, from your view, since you've been on both sides and obviously know everything about the world of origination, what is it that loan officers could do that would actually put them at ease and also obviously give them a trust level relationship?
The first thing is finding out what they want and need. The second thing is when they're issuing, look at a lot of people, and I've said this for years, you might be dealing with a real estate agent that only closes 8 transactions a year. I don't know.
Hmm.
Most realtors are not closing a lot of business.
Hmm.
It's the small percentage that close a lot of it.
Sure.
If you're dealing with an agent that closes 8 transactions a year, I'm just picking a number, and they refer 4 of those transactions to you, you're in control of 50% of their income.
Right.
That immediately makes them nervous, right? The originators really got to get their act together. And if their company isn't offering them training, they've got to figure out how to get it and they've got to do it. And when it comes to pre-qualifications and pre-approvals, they need to understand that is not something to be done lightly. That is not something you just run through DU and, oh, okay, they're pre-approved, and not understand the documentation requirement, variable income requirements. There's so many pieces to it. I mean, I know originators, they don't even look at the sales contract. Why wouldn't you review all of the terms of the purchase contract and make
Hmm.
sure there's nothing in there that's going to cause an issue? Why should an underwriter 3 weeks later come back with some problem with a contract? That's just an example. So my best advice for mortgage loan originators is if you can get a file fully underwritten prior to a contract, that is going to be the strongest message you can give to an agent. Now, some companies won't do that and some companies will. On the broker side, I think we have more of an opportunity for that because the wholesale lenders are a little bit more flexible. There may be lenders that don't do it, banks. There's companies that don't want to do that because they don't want to go through all the work of underwriting a file if they don't know if it's going to close. They want a contract. But there are lenders out there that will fully underwrite the file. It goes in front of an underwriter's eyes. And really, Pat, if you think about it, if the file is complete at the initial submission, the
Right.
only thing that should come back is title work, appraisal, homeowner's insurance, maybe proof of the clearing of the deposit check. Why should there be all these outstanding conditions? It's because I think the loan originators don't understand really what they need, when they need it, and how to get everything cleared as quickly as possible.
So what do the realtors say? And you've done so many of these continuing ed classes. What do the realtors say about the handoff strategy, which most lenders do, where the loan officer's in the beginning typically, and then it goes off to the processor world, and then they, in essence, have the contact? Because a lot of what you're talking about is predicated on each part of the parties being very knowledgeable. So I'm just curious, like, what did they say about the handoff, and then the loan officer's kind of out of it?
They don't like that. They don't like when they know that a loan officer did the first, I'm just going to make up a number, the first 10 steps, but the next 25 steps have to be done by a processor, the underwriter, the closing department. They want to know that that originator is in control of that transaction throughout the process.
Hmm.
It's very hard for that to happen. And I'll just pick on the depositories for a second. Large depository institutions have everything compartmentalized. So
Right.
one person does the BOE and one person does this and another person does that.
Hmm.
That file moves through too many people's hands for any one person to know what the total picture looks like at any given point in time. And when it comes to the communication, they want to know that that originator knows what the status of that file is.
So isn't it kind of interesting? I mean, you would, if you just flip the roles, you would want to know that too. And so isn't it interesting that typically the loan officer is taken out of the transaction put with a non-salesperson for the rest of it, and then the loan officer is supposed to step in at the closing. That system has been in place now for years. What do you
Mhm.
think about that? Because really what you were saying is that the loan officer needs to be in sync with the realtor throughout the process, and that doesn't always happen.
So, I mean, the example I could give you is as a small broker, I processed all my own loans. Okay. When I had a big company and 20 originators and whatever, we had processors to handle the volume. But my point is going to be this: with the technology that we have available today, it really almost seems like, and I hate to say this, I don't want processors to be out of a job, but that originators should be able to process their own loans, collect all their documents, put everything together in a way where it goes directly to an underwriter, and that communication between the originator and the underwriter is
Hmm.
tight, because
Hmm.
it's not just the communication with the real estate agent or the customers, it's the communication with the underwriter as to the status and what the problem, if there's a problem, if a condition comes up, how do I resolve this? They should be able to work through that. And while processors serve an extremely important function, the originator should be able to process, and I use the word process
Hmm.
loosely, should be able to process the file to a point that they know what's going to happen. Like I always knew what was going to happen on my loans. I
Hmm.
you have to understand what you're working with, and so half the time they don't even know what documents to ask for.
Right. So talk about, and since I know you've done these CE classes for realtors recently, what was their opinion of the world of the relationship with the loan officer? And were they happy generally, or was there really a lot of disconnect? And if somebody good came along, they would make a change? What did you actually see?
I don't know that they address that specifically, but I'll say in general, what I hear from real estate agents is you're only as good as your last deal, right? We always heard that thing. And if you mess up a file, they're not going to use you again, which is a huge incentive for mortgage loan originators to get their act together, so to speak. I think that they just will go, they will take the path of least resistance, and
Hmm.
they want to just go to who they know can get the job done. Interestingly, I did ask the question, what about rates? And consistently, they don't care about rates.
No, right.
They do not care. And one woman said, I do not care about the rates. And it's not that what they're not saying, I don't care if my customer gets overcharged or something. What they're saying is
Yeah.
I have no control over that. And they're really leaving it up to the experience and expertise of a loan originator to do the best they can to get them the best rate. There's no magic rate number out there. It varies based on, all the things that you and I talk about, Pat, when we do the classes is, loan level pricing adjustments and risk factors and all of those things. Agents don't understand that. And interestingly, most of them say, I don't need to know everything. I
Hmm.
don't need to know everything. And yet I have a class, a real estate continuing ed class called When Deals Fall Apart. And I go through, here's what happened, here's why it happened, here's what you didn't know was going on behind the scenes that caused this problem. And then their eyes are opened and they're like, I didn't know that before. Like, I never knew that.
Hmm.
So there's a huge opportunity here to educate real estate agents, tighten the relationships with loan originators, have the loan originators be more inquisitive than more selling, more educational towards the agent, so that the agents understand why we ask for things, why we're doing things, why things get delayed. They just don't understand.
So that leads to the question. I mean, you and I have been in the business a long time, and really what's happened over the years, it has been segmented into the originators taken out of the deal basically as early as possible. And then it's led to this kind of segmentation. And it doesn't seem that the people that it gets flipped to are actually people that can actually even explain what's happening, and maybe not even trying to explain it because they're really just the people that check the boxes, if you will. So this has happened in the past. It didn't operate that way. Now it's really segmented. And so what is your thoughts on that? Is that has led to real estate agents not being really that happy with the loan officer world because they can't get involved, they don't get the feedback that they want to get?
I think in general, there's more of a negative connotation or more of a negative association with mortgage loan originators than there is a positive one. Having said that, there are many agents out there who have fabulous relationships with originators that get the job done, right? I mean, obviously, we're closing transactions. Somebody's got to be getting something done.
Sure.
Here's my question. What did they do to the agent and the customer in the process?
Yeah.
You can get to the closing table, but if you're dragging people screaming and hollering by the hair, if everything becomes a nightmare, if you're going back to the customer and asking them 6 different times for another document, clearly they don't know what they're doing. The second part to that is you asked about what do we do about this segmentation? Processors are probably one of the least trained people in the industry. I
Right.
mean, originators don't get trained. You and Pat, you and I've done processor training.
Sure.
They don't get the training either. If everybody knew what everybody should know, right? If they
Right.
all knew the same things, if they were trained on the same issues and concepts and foundational principles, then everybody would be able to flow. But there's this segmentation of discipline, right? You're the salesperson, you're the processor, you're the closer, you're the underwriter, as if they shouldn't all work together and have the same knowledge base. It all comes down to education. And as I said, I got into business in 1994. I am still shocked that we're talking about this 30 years later. There still is not a standardization. If you want to go get your accounting degree or go work for an accounting firm, there's a 4-year program, right? We got nothing. We have the hope that people here's the other thing I hear originators complain about when they go to the companies, and companies need to be aware of this. It does not help an originator who's newer or new for the company to say, don't, when the person's asking, these people are begging for training. I'm on a lot of Facebook groups. They are begging for training. And the companies say the same thing. Just go get your first loan and then we'll work on it. It doesn't work.
Yeah. No, well, you and I are on the same path with this, and it really is mind-numbing all these years that lenders as a whole consider their training just to be showing them how to work their system and so forth. So what are some of the takeaways that you want to leave the audience today about this issue of maximizing the relationship with the realtor? What matters from all these classes that you've done with realtors? What are the top 3 things that matters to them?
Communication, effective communication, understanding how they want to be communicated with. Is it a text, a phone call, an email? One agent said to me, I don't care. I just want them to respond to me, right? The knowledge to be able to put together options and to be able to educate the borrowers as to here's some of the things you may not know are available to you. And then I would say, agents want to know that these people are really, truly qualified, that some letter didn't just spit off some system somewhere and say, yeah, here, go look at houses. It's not fair. It's just not fair, As far as what mortgage originators can do for more real estate business, I've been teaching real estate CE for 20 some odd years. And if you can I have a program, if I could plug this for a second, I have a program where I teach loan originators how to get to teaching real estate CE so they can get out there in front of people. The benefits are huge. The credibility and the trust factor rises, 200% when they see you in front of a room talking about mortgages and explaining things to them that they never knew. And I picked up a lot of business from that.
Well, Deb, that is certainly, I highly agree with you. And I think it's a smart idea. And certainly it's a mystery of life that the relationship between the loan officer and the real estate agent isn't really looked at as a partnership. It needs to be, because that's a lifeline for our industry. So I want to thank you for sharing all your thoughts. I mean, Deb is one of the smartest people when it comes to the practical world of mortgage origination and everything that you need to know. Certainly you can contact with her. I know that you have a Facebook group, and I know you certainly are active with LinkedIn. So I highly recommend everybody to reach out to Deb. And Deb, any final comments that you want to make?
I do have one more thing I want to say. In light of what's happening in the real estate industry right now, it is really, really important that originators understand what the realtors are going through on this commission, buyer agent commission thing. And we have to make sure
Yeah.
Because some of the buyers may need to pay their buyer agents, that may come up. We need to be sourcing the funds at the very beginning of the pre-qual or pre-approval process to make sure if the seller is not offering cooperating compensation, that that buyer has funds. Because
Yeah.
if an agent comes along and works with the buyer and then the buyer all of a sudden doesn't have the money, they're going to come back to us. We issued a pre-qualification. So that real estate commission for the buyer agent, even if it doesn't have to get paid, needs to be considered way early in the transaction now.
That's a good point. So how can people get in contact with you?
Deb at CLOES.online. That's our website, CLOES.online. My phone number is 866-256-3766. I welcome phone calls, emails, texts. Find me on Facebook, LinkedIn. I'm out there.
She's out there. That's true. I can verify that one. Well, I want to
Thank
thank you, Deb, for sharing all your practical information. And certainly, I would highly recommend that people contact you with any type of questions because you're in the real world of what it takes to pull a loan together. And I want to thank our listeners today. Certainly, if you're interested in more knowledge and information regarding the mortgage world, go to patsherlock.com and listen to our podcast. Thanks so much, Deb.
Thank you very much, Pat. Take care.
Bye-bye. Thanks for listening to Mortgage Manager Playbook. You can catch up on all our episodes by subscribing to receive each week a new show. Don't forget to share this podcast with your friends and team members. If you're looking to increase production, call me to discuss my prospecting sales training program, Ramping Up Realtor Referral Sources. Check out my website, www.patsherlock.com.